What is better, a 401k or a Roth IRA? Do you even know what those are? Well, let's scratch the surface of it. Let's get into it. So both a 401k and a Roth IRA are retirement-based accounts, okay? And so I just put some basic info for you here. The employee contribution limits in 2025 for a 401k are $23,500 and for a Roth IRA are $7,000. Now I know there's catch-up contributions and employer sides, but I just wanted to give the base there. Then the tax treatment. So if you contribute to a 401k, you get a current year tax deduction. We'll talk about that in a second. If you do it to a Roth IRA, nothing happens. You are putting in money from your bank account that's already been taxed. The tax treatment later, this is where it gets a little bit different as well. 401k, when you pull the money out, it adds to your ordinary income. Roth IRA, because you put the money in after it was already taxed, you have no tax in the future. Here's how that looks a little bit more broken down. So for the 401k and the Roth IRA, let's just say we make $100,000, okay? Then for the 401k or Roth IRA contribution, we're gonna do this the same. $7,000 is gonna go to each of those, okay? So with the 401k, it lowers what's called your taxable income. It's a current year tax deduction. So instead of paying tax on $100,000 for the year, it would now only be $93,000. The Roth IRA does nothing to your taxes in the current year, so you still have to pay tax on $100,000. I just did a blanket 25%. I went about 20-ish federal, and then if you have some state taxes. So if you do a 401k contribution, you make $100 grand, your taxable income is $93 grand. With $7,000, it would save you in taxes about $1,750 from contributing to the 401k. Now, let's say that future investment of $7,000 grows in 15 years at 9%. It's going to grow to that $26,000 number. When you pull money out of the 401k, you have to pay tax on it. You got a deduction going in, you got to pay tax on it going out. So your future tax bill, again, blanket 25%, would be almost $7,000, where the Roth IRA, you have no future tax bill. Now, there's a lot of things that go into this. You're trying to guess future tax rates. You're assuming you wouldn't use the current year tax deduction as an investment, but just to show you a little side by side, hopefully that is helpful. There are awesome reasons to do both a 401k and a Roth IRA. I'm just trying to teach you about them, and hopefully this was helpful. 401k, current year tax deduction. Roth IRA, future tax-free dollars. Chris Lee, Everyday Finance. I will see you guys in the next one.